Welcome to Furniture Industry News for December 27th, 2024, your source for the latest updates in the furniture sector. In today's episode, we'll cover several key developments affecting our industry, including potential port strikes on the East Coast, the anticipated impact of new tariffs, shifting consumer confidence levels, retail outlooks for the year ahead, and the latest on job satisfaction within our industry. Let's dive into these important stories that are shaping our sector. Major developments are unfolding in ocean freight as Hapag-Lloyd, the world's fifth-largest carrier, announces significant surcharges in preparation for potential East and Gulf Coast port strikes this January. The German shipping giant plans to implement charges of $850 for 20-foot containers and $1,700 for 40-foot containers, covering all equipment types. These surcharges are set to take effect on January 20th and are designed to offset potential costs from labor disruptions, strikes, slowdowns, and related operational delays. The announcement comes as dock workers and port operators face a January 15th deadline to resolve outstanding issues, particularly regarding automation. Container rates have already begun responding to the uncertainty, with rates to Los Angeles climbing 26%, and New York seeing a 17% increase in recent weeks. While other major carriers haven't yet announced similar surcharges, many did implement them during previous labor disputes in October. This situation bears watching as it could significantly impact furniture shipping costs and delivery timelines across the industry. A new survey from ResumeTemplates.com reveals significant concerns about the impact of proposed tariffs on businesses that import goods. According to the study, an overwhelming 82% of companies anticipate raising their prices in response to these tariffs. Breaking this down further, 41% of respondents consider price increases very likely, with another 41% saying they're somewhat likely to raise prices. The expected price increases aren't minor. 41% of companies anticipate hikes between 5% and 10%, while 22% are preparing for increases of 11% to 15%. Nearly 90% of these businesses expect these price increases to result in reduced customer demand, with 13% bracing for a significant drop in sales. Cost-cutting measures are also on the horizon, with 70% of companies planning to implement various strategies. These include potential layoffs affecting 37% of businesses, reduced hiring at 64%, and cuts to employee benefits and bonuses at 38%. Many aren't waiting. 41% report having already taken some of these measures. The financial outlook appears challenging, with 7 in 10 companies expecting both profit margins and growth to decline. In response, 35% of businesses are currently accelerating their imports before the new tariffs take effect. This comprehensive survey, which gathered responses from 500 workers at importing companies, paints a picture of widespread concern about the potential economic impact of these proposed tariffs. Consumer confidence took a significant downturn in December, falling 8.1 points to 104.7, according to the latest Conference Board report. This decline puts confidence levels back to the middle range we've seen over the past 2 years. The Present Situation Index, which measures current business and labor conditions, decreased slightly to 140.2, but it's the future outlook that's raising more serious concerns. The Expectations Index saw a dramatic drop of 12.6 points, landing at 81.1. This is particularly worrying as it's hovering just above the critical 80-point mark that typically signals an approaching recession. Consumers have become notably less optimistic about future business conditions and their income prospects, with pessimism about employment opportunities returning after brief optimism in October and November. The decline in confidence was most pronounced among consumers over 35 years old and those with household earnings between $25,000 and $100,000. Interestingly, younger consumers under 35 actually showed increased confidence compared to the previous month. These findings, based on an online sample of over 36 million consumers, suggest a growing divide in economic outlook across different demographic groups. After a challenging 2024, furniture retailers are approaching 2025 with measured optimism. The industry saw a noticeable uptick in business following the presidential election, sparking hope for a stronger year ahead. However, several key factors will need to align for a full market recovery. Interest rates remain a critical concern for the industry, with many retailers noting that rates need to decrease further to stimulate furniture purchases. The housing market's inventory levels also need significant improvement to drive sales growth. Adding to these considerations is the possibility of new tariffs, which could trigger price increases and potentially lead consumers to postpone their furniture purchases. Despite these challenges, many industry leaders are expressing confidence in their positioning for 2025. Some retailers are already seeing positive trends, with higher conversion rates and strong average order values. Others are noting increased customer engagement and successful new customer acquisition, suggesting a solid foundation for growth. Many retailers expect the real momentum to build in the latter half of 2025, with some predicting significant improvements by the third or fourth quarter. This gradual recovery could be further supported by pent-up demand and replacement cycles from early COVID-era purchases starting to kick in. To prepare for various scenarios, retailers are focusing on what they can control, enhancing customer experience, maintaining competitive pricing, and ensuring strong inventory positions across different price points and quality levels. Recent data from the Strategic Insights Salary Survey reveals that job satisfaction remains strong in the furniture industry, though showing some subtle shifts from the previous year. Among retailers, 79% reported being either very or somewhat satisfied with their current positions, marking a slight increase from 2023. Manufacturing employees showed similar contentment, with 76% expressing satisfaction. However, there's been a notable decline in those reporting the highest levels of satisfaction. The number of retailers saying they were very satisfied dropped from 48% to 44%, while manufacturers saw an even steeper decline, falling from 37% to 31%. This trend was consistent across gender lines, with male manufacturers showing the most significant decrease in high satisfaction levels. The changes likely reflect some challenging workplace developments over the past year. About 1/4 of retail employees reported layoffs at their companies, while 40% of manufacturing workers experienced similar measures. Additional workplace adjustments included hiring freezes, wage reductions, and eliminated bonuses. Despite these challenges, benefits packages remain robust across the industry. Most employers continue to offer comprehensive health insurance, 401k programs with matching contributions, and year-end bonuses. The majority of retail positions remain predominantly on-site, while manufacturing roles show more flexibility with increased options for remote and hybrid work arrangements. These findings suggest that while the furniture industry continues to provide stable, satisfying employment opportunities, companies are navigating a complex balance between maintaining employee satisfaction and addressing ongoing economic pressures. That's all for today's edition of Furniture Industry News. Thanks for joining us to stay up to date with the latest developments shaping our industry. If you found this information valuable, be sure to subscribe wherever you get your podcasts to receive these important updates directly in your feed. Until next time, keep building success in the furniture industry.